Hey guys, welcome back to the channel. Today I'm going to be providing a market update on my Ethereum logarithmic regression curve, given how it has been a few weeks since I did my last video on that, and we have come down quite a bit since. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So if you're new to the channel and you don't know what this is a logarithmic regression curve line. Basically, it is a continuous function that is plotting a logarithmic curve fit to the data points within the bear market phases. So I fit the data points to these points in 2015, this bear market, and then this bear market in January of 2017, kind of the phase before continuing on another leg in this bull market. And then I fit it to the data points in the later 2018 and early 2019 bear market. So these points together, they plot this curve here. This is a continuous function that will monotonically increase. So basically, the thesis here is that Ethereum, in general, in the long term, will trend up with time, and this curve models the rate at which the bear market lows are moving up. So currently, we are within the bands, and if I take a measured move here, the last time we were within these bands was approximately 77 weeks ago. So obviously a very, very long time, and the last time we actually were at it corresponded to around $600. So even though we are at the top of the band here, similar to that of December 2020, it corresponds to a much higher valuation. If I take a measured move, the top of the logarithmic regression curve band has risen about 103% over this 79-week period. So that just goes to show you how quickly it is increasing. And currently we're at the top of the band. We saw last bear market, we had this bottom here around the lower line in this regression curve. So the lower line today is approximately $586. And I'm going to be covering a little bit later on in this video why I think this might be a little bit far-fetched. The middle line, I think, is probably a reasonable target to assume a longer consolidation phase and accumulation phase, similar to how in December 2018, January 2019, we had kind of some candles that just rode along the middle line with slight deviations above and below. So that's kind of what I'm expecting for the bear market bottom to be, kind of consolidating around this middle line. Maybe we do a deviation below and above it. Really kind of, I think the bottom here would wick just below this, but I don't think we're going to spend too much time at the lower region. So now I'm going to pull up a different indicator that is actually plotting the closing price here, color coding it based on how close we are to the middle of the band. So if we're really, really far above it, like we were in January 2018, it's going to be in red. It's going to be in these really, really warm colors. The reds, the oranges, and the yellows correspond to when the price action is very far extended above the middle of this regression curve. So you can see how we first entered the red when we were approximately 1000% above it. And then on the other hand, when we are within this band or even below it, it will be these darker blue colors, and everything in between just kind of goes to show you and illustrates the percent difference. So you can see how we've entered back into the blue because we are getting very close to the middle of this line. Again, it is at $831, and currently that is only another 23% down from where we are. And mind you, the low that we have in place right now was at around $880. So obviously very, very close. But I want to direct your attention to the peak here, where the most we got here was in this green color range. And again, that corresponds to an overvaluation and extension above the middle line by about 600%. So given that we weren't as far overextended on the peak, we didn't reach the yellow range, we didn't reach the red or the orange, given that we only got into the green and we were only extended by about 600% as opposed to an extension of about 3000%, I would expect that to kind of correspond to the downside, where we won't see price action go as far below it. So I don't think we're going to be seeing similar events like the March 2020 capitulation, where we go and drop below the lower curve by about 36%. because we weren't as far overextended to the upside, we won't be as far overextended to the downside. That's my thesis, that's my belief. And I think, the fact that we didn't have such a crazy mania blow off top will kind of correspond to the fact that we won't have the inverse of that, where we have, an extreme capitulation to absurdly low levels below this logarithmic regression curve. So that's the end of my analysis on Ethereum and this logarithmic curve. I hope you guys did enjoy, and as always, I will see you in the next one.